Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap, and thanks for your support. We appreciate you very much. So let's talk a little bit about a trend that's a little disturbing over the last several days, and something that at the very least you want to be sharing with clients, because the Fed has played an enormous role in this gift that we had in housing in 2020, and will likely continue to be the gift that keeps giving throughout 2021. And while we're not expecting any material rise in interest rates for the foreseeable future, certainly through the first half of 2021, we're watching things happen right in front of our eyes that I think is very important. So let's talk about it. The Fed, as we know, is buying $120 billion worth of $120 billion worth of treasuries and mortgage-backed securities each month, 40 billion of which are specific to mortgage-backed securities. But what has happened of late is the Fed is coming in and they're buying, pushing prices up higher intraday. And then as soon as the Fed is out of the market and they're done buying, which is around 1:30 in the afternoon Eastern time, bond prices kind of fade and they move lower. And so there's like a weight to the bond market. And so let's just kind of blow up this chart a little bit and just talk about it. And so you can see here, this is the all-time high. We're there for a minute, and these were the previous price peaks. You can see that we're unable to break above them. And so there's selling pressure that's overwhelming the Fed buying. Like just yesterday, the Fed came and they purchased $7 billion worth of bonds, but 18 billion were for sale. That's an unsustainable trend. If there's more selling than buying, it's tough for prices to move higher, and it makes this opportunity to lock folks at these levels pretty smart. Because the reality is, if the Fed were not buying bonds at all, rates would already be higher. And so again, while we're not expecting rates to move up materially uh, in the foreseeable future, we're watching things change. And then what I would leave you with as we head into the weekend, 98 basis points on a 10-year note is a ceiling, meaning it's stopping rates from moving higher. Here we are on a Wednesday. We're going to test it, it looks like, again. And if that gets taken out, things will be different. So I will be sharing this stuff with a client, and at the very least, use it to get them into application. Have a great day. Merry Christmas to you. Thanks for tuning in. Have a wonderful week. Bye for now.